Hey there, welcome to another edition of Midas Letter Friday. I'm here with my good friend and co-host, Edward Special Milewski. No, Special Edward Milewski.
Special head.
Special head. Woohoo!
Special head.
Yes. Oh, the dogs are going nuts.
Yelping.
Right on cue.
Yelping.
Right on cue, yeah. So what do we got today in the way of a show you want to know? Well, we've got, of course, our usual audience questions. But also we have two guests today. Maxim Galash is the CEO of Coinchange Financials Inc., a DeFi play that is, he says, not at all encumbered or fraught with the risks that everything else is in the DeFi space. We also have one of our sponsors, Shawn. Khunkhun is CEO of Dolly Varden Silver Corp. If you don't recognize that name, it's been around forever. Yes. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. Let's go to the audience questions, Edward, because, they're the most popular part of our show. JD Travels wants to know, lithium prices will fall as more projects come online. Will we see significantly lower prices by 2026? I have a response to that, JD, and so we've got two major factors driving demand for electric vehicles, right? You've got expendable income, can I afford an electric vehicle? And you've got availability, can I get an electric vehicle if I can afford one? Now, Elon Musk is in the news complaining that all of the new gigafactories built around the world are losing money by the billions. Why? Because of battery shortages from the Chinese. So it reveals that, Tesla's ability to deliver cars is largely tied to the Chinese ability to supply batteries, but not only to their ability, but their willingness. Now, if you've got a customer and your customer's always saying, you know what, I know you'd like to build a battery plant here, but you can't because we don't like the Chinese here. How soon do you think till the Chinese say, you don't like us? Fine, we'll sell our batteries to, how about Russia? Stephen Markovic wants to know, why are people complaining about less than 1% increase in taxes? In the 80s, we were paying 20%. Are people complaining? I don't hear anybody complaining.
You know what? I'll tell you, people will stop complaining because if nobody's making any money, nobody's paying any taxes.
No, that's
Unless
true.
you live in Dallas,
Did you
Texas.
hear that there's Dallas, Texas? Dallas taxes? That's hilarious, Edward. We're paying 20, in the 80s we were paying 20%.
20% of what?
Well, he's saying 20% in taxes.
Is that all?
Yeah, I don't know what we were paying 20%. In the 80s, I was a boy, so I wasn't paying.
Yeah, if you make hardly any money, you only pay 20%.
We need more clarity on that question, Stephen Markovic. Do you mean we were paying? It says we're paying 20%. In the 80s, we are paying 20%. So we are paying, or we were paying. No, we were paying.
We are paying.
Yeah, the apostrophe indicates we are paying.
We are paying.
Yes.
We.
In the 80s.
That's a good rate, 20%.
That's cheap.
Yeah, but
Johan Porter asks, thoughts on the FDA decision to ban Juul E-cigarettes from the U.S. market? Well, Johan Porter, once again, the two-tiered approach to justice rears its fearsome and ugly head in that, really? You're going to outlaw Juul E-cigarettes but not tobacco generally? Oh, why is that? Too many senators have shares in R.J. Reynolds and others? Yeah. Talk about a corrupt nation.
It's a favorite among the politicians.
Exactly. Half of them smoke.
Yeah, they smoke those damn Camels. Yeah. And they say, well, you know what? If the company's going to get rich, I'm going to get rich too.
So the FDA is banning them. Their defense is that, it's because it's young people who are suffering. Ban all smoking if you wanted to be fair, FDA. But no, it's just targeting an industry that came up too fast and forgot to pay off enough FDA board members.
Yeah,
get them involved.
Forgot to pay.
Yeah, you got to hire these guys as consultants before you roll out your product.
Why do you think they carry cash?
Exactly.
Jesus.
Harry wants to know, how do you avoid bear market rallies when trying to buy discounted stock on the dip? I.e. waiting in too soon and catching a falling knife, only to see your little fingers flutter and flip into the air, blood spurting everywhere. Damn,
I lost the end of my finger.
And all the rings. Jesus, what happened?
No, I should put the rings around my nose.
Yeah, avoid bear market rallies.
If you recognize that the primary trend is down, which has been, the rallies, which are kind of frequent, are usually just short cover rallies, and that levels things out for a while, and then the downtrend resumes. I think that's where we're at. It seems like we're
and also,
nothing's bounced. Nothing's really bounced.
If you're going to play a bear market rally, that implies that you're practicing the age-old art of market timing, which is a technical skill, right? Yeah. You don't play market timing corrections and rallies on a fundamental basis.
No. You do it all on
technicals, right?
That's actually,
right. So if you're watching,
once in a while he says something that's really good, profound. We just saw it, folks. So,
how has the Russian ruble rinsed to 7-year highs? I think he means risen.
It really went high. It was the best performing currency for a while. And the reason was pretty simple. Their interest rate was 10%, and they immediately raised it to 20%. And so when you raise the rate, that was one of the
makes it an attractive investment. Hey, yeah, you want to borrow some money at 20 points?
I don't know. 10 doesn't seem to be enough. I'll tell you what. Make it.
Anyway, so why has the Russian ruble risen to a 7-year high? Because they raised the rate they're going to pay borrowers to 20%. That's very simple. 5 years, and you've made 100% of your deployed capital back in interest.
Anything can happen on any given day based on the escalation and volatility that we're seeing. We're seeing look at bond yields.
Yeah, so Bill over the hill, the stock market sell-off could just be getting underway. Mind you, what happens if the Fed reverses course at the July meeting, says, you know what, we're going to raise interest or lower interest rates, we're going to increase
James, what if they go so far and they go too far and people say, we don't want to play anymore?
Well, do you know what their response will be? Fine, we'll print $1 trillion a month. See how you like that?
We'll deposit it in your account. And you're telling me you won't take any of it?
Did you see this thing they're coming out with FedPay or FedNow? It's like you got to see this exchange in the. We got to find that one.
Who's involved in this?
Well, so it's Jerome Powell having an exchange. This is yesterday in the Senate.
Is this This is not edited.
No, this is. We got to go back to our TikTok.
They're showing us the first steps to complete surveillance under a one world bank and a one world currency. I'm talking about the FedNow instant payment service, which will be launched in 2023, and which will be an app that everyone is required to download on their phone. Remember when the federal government deposited $1,600 in everybody's personal checking accounts for the first time in history? Well, they said that process was too slow and that they're going to need all Americans to give up their personal privacy rights to the private institution known as the Federal Reserve so that for the next time they can speed that up. And they're selling it to us as safe, efficient, around the clock, every day of the year, time sensitive, flexible. But don't just take my word for it. Here's Fed Chair Jerome Powell testifying before the Senate Banking Committee on Monetary Policy on June 22nd.
I can't let an opportunity go by without raising the issue of the FedNow real-time payments system implementation. You would agree that if we can get the system into place, it will save millions of Americans billions of dollars, would you not? Yes, I would. And so that's why I just want to encourage you to move very quickly. As you know, the system is scheduled to go up next year. We had an earlier hearing in May in this committee, and Brookings Senior Fellow Aaron Klein, who spent a lot of time monitoring this system, shared his concern that we weren't moving fast enough to hit that date and fully implement it. So I just want your commitment, Mr. Chairman, that you are focused on this and that it is a priority.
Very much so. We're very focused on doing it right and also on time. And that's next year.
Right, because it especially impacts, of course, people living paycheck to paycheck, right, who make a deposit in a bank but it doesn't clear. And then they get tagged with all sorts of overcharge fees and things like that. So I just...
Oh, that's the solution to overdraft fees? Just the complete forfeit of our privacy rights. Well, it's pretty convenient for the next crisis that may or may not happen.
So, how scripted do you think that exchange was between Jerome Powell and the honorable senator from Democrat?
Well, it looked like,
Yeah. Like, why would they have that conversation if it weren't to create a public record of support among senators for the Fed's policy? Anyways, never mind. That's all we have to say about that.
Yeah.
So, David A. wants to know, is the only reason we were not in recession since 2021 is that the metrics for determining whether we're in a recession are weighted to show we're not, i.e., is data selected, presented to media in such a way to create the media projection that we're not in a recession. And David A., I would say that's very, very astute on your part, and that is almost always the case, and the more time passes, the better they get at it, of trying to present data that would indicate we're in a recession as indicating we're not in a recession. Just as, we're saying that the markets, so when the market goes up in response to the Fed raising rates, that's a good thing. The market responded favorably, even though we know that it's the Fed.
But it's kind of funny, and I don't know whether this is along the same lines, but, I remember distinctly you and I sitting here, and I remember Amazon's chart was up in November, and I said, it just doesn't look right, blah, blah, blah. Things started to roll over. And as the market drops and this market cap gets lost, that brings on the fucking recession.
Yeah.
Because people start, we're not going out to dinner tonight. What are you, nuts?
Yeah.
I'm not buying you another fucking Porsche.
I've just lost my job. You want to go buy what online at Amazon?
No, but 15 to 17 trillion.
When was that? Was that back in December, or was that back in February?
Okay, so that was the peak in December.
Yes.
Is that, you got Amazon there?
That's November 22nd right there, yes.
Okay, now you got to go back this way. There. Those two highs. Right there. And this thing sold off fast, and that's a perfect double top.
And so a double top is always an indication, technically, of an imminent.
It depends on it. It could have stayed, but then everything else started to drop with it.
Yeah.
And then they came out with a surprise. They came out with their earnings.
Yeah.
And look at what do you mean? What do you mean? There's no earnings? What? They ramped up. Amazon apparently ramped up during COVID time to get ready for the big party. That's the problem. There needs to be a little bit of a
hiatus.
Enema. Cleansing.
No, we're not going down that path.
But I say
we're not going back down that
full respect.
Okay.
Cleansing.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. I think, Ed, that we should just start looking at some charts here because, the charts are where it's at.
Charts.
Let's start with a look at the price of oil because it's all about the energy. You feeling energetic today, Edward? Look at this.
I haven't had any oil yet, so maybe I'm not so energetic.
Oh, look at this.
Oil.
Oil's really taking a shit kicking.
You know what? Copper is taking a shit kicking. It's now $3.70 something after going over $5 briefly, You know.
Yeah. Well, look at this. I thought we were in a commodity market here. Like, what has happened?
Pay attention here.
So there's this.
They've raised rates to the point where maybe, just maybe, people are starting to say business has stopped. Like, things are falling apart. 60-cent drop in natural gas back to 6. It was over 9. That's a 50% haircut.
You know who's happy about that? It's the Germans. The Germans were just about to start the gas rationing because of that pricing. Anyways, they're pretty happy about the price of gas going down. Yeah, the Russians, not so much. I wonder how much of this, you know, I was watching a video, Eric Nuttall, who's with 9 Point Asset Managers.
Smart guy, he's quoted, he's everywhere.
So he was
he's here, he's everywhere.
He's everywhere. Actually, you know what? Let's just insert that little video into the clip. So he was saying that he recently supped with the secretary of OPEC. And supped.
Dined.
Ooh. Broke bread. Raised a glass. Had a repast. Baby, pheasant under glass.
Duck Laurent.
Foie gras. The foie gras. Have you seen our foie gras walking around out there?
Not for long.
They're looking at us. Why do you keep calling us foie gras?
Well, you change your name?
Yeah, exactly. We are French. Fuck you.
Oil got smoked. Oil got hit for, well, as a matter of fact, I think 8 or 9 days ago, it was hitting a new short-term high.
Yes.
Like when I say short-term high, I'm talking about several months.
Yes.
Several weeks. Right there.
Here, you play with the little, there's your little arrows and everything.
Right there. Right.
Yeah. Wow, what was going on there?
It was reaching up to break this high, which it just and
Really?
then all of a sudden,
Wow.
like that.
Wow.
Then another one. Now we've had 3 of these. It looks pretty oversold short-term. I'd say, you may get a bounce here, but, then you got Dr. Copper acting like shit.
Dr. Copper.
So interest rates dove.
Let's pull up an interest rate chart if you want to talk about interest rates. Let's go.
It hit 350. And everybody was saying, it's going higher. I just think that the economy is starting to really, really slow down.
All right, there's the interest rate.
Whoa! What's going on there?
Jeez, that's the 10-year yield right there.
It's now, what, 304?
3.05.
Okay.
Look at that.
It got down to 3. I think it was 301.
So is this telling us that there's an expectation the Fed is going to lower the interest rate again?
They maybe have gone as far as they've gone. Like, we have to see where it ends up. Like,
because I heard one of the governors was looking at in the July meeting that she was jawboning a 50 to 75 basis point increase again.
Yeah.
So Bank of Canada's already So are we already at the point where their stomach for that might not be?
They have odds. They have based on futures, the futures of the Fed.
Yes.
They can say there's an 80% chance that they're going to go to up 25 cents. There's a 60% chance they're going up 50 basis points. And then they might say there's 20% chance. But last week, there was over 100% chance they're going to raise another 75.
Yeah.
But it's all changing now.
Right.
It's changing as we speak.
So what about gold futures? Like, relatively speaking, gold is basically flat.
On the year. If you look, that's gold.
Yeah, that's back, year to date.
There you go.
Yeah.
So where it was here, now it's there.
Yeah. So, which is more or less flat.
If you put all your money in gold, you'd be a happy camper.
Yeah. So what other asset class has performed as to? Well, but
I don't know. Cash is an asset class. It's not for you and I.
Cash is something that's causing a fire in your pocket.
Rich people.
Rich people.
Yeah,
that's not us for sure. Yeah. Well, but no, relatively speaking, X of cash, the best performing asset class has been gold.
Gold looks that way, yeah. Well, yeah, because nothing else is up. Now, you might argue oil and gas, energy stocks, I think, done pretty good here.
Yeah. Energy stocks. Well, let's take should we?
But I don't think they break them out by sector. They broke it out. They just said
let's look at Exxon. Okay, so
look at it. What the hell's that telling you?
Well, it tells you that Exxon correlates to the price of oil pretty closely.
I know, but
yeah,
the insanity of the bullishness up there.
But technically, in a bull market, this sort of stands as a correction after a lot of that is absorbing a lot of this upward momentum. So it's still healthy, although it has broken through this support level here, right?
Well, interestingly enough, this looks like the last time it tried to correct. So, yeah, you could draw a line there, and it's starting to look. But you could also now maybe see a $5 or $10 rally in oil, couldn't you?
Sure. Well, this is the thing. I don't understand why. So everything oil is telling us that the anticipation of demand destruction as a result of recession and interest rate pressures is going to overwhelm the shortage of supply caused by Russia.
Yeah.
So
yes, that's exactly. So
So this tells us that there's worse to come on the broad economy, and probably a lot worse to come in stock markets. I saw that J.P. Morgan was predicting, or Morgan Stanley rather, analyst at Morgan Stanley was saying that.
Somebody by the name of Morgan.
No, what's Stanley?
Stanley?
Stanley, yeah. And he was saying that there's going to be up to another 20% downside on major indices in the United States if the Fed continues to raise rates. And then the Wall Street Journal came out with an article that said the market won't bottom till the Fed starts printing money again, till the Fed starts to quantitative easing. So it's like, here's these financial types trying to influence the Fed and saying, look, you guys got to turn this around.
You don't.
Yeah.
We're coming after you. You think January 6th was fun? I'm sharpening my pitchfork.
Yeah, exactly.
Powell.
Got my wooden sword.
Watch your back.
Yeah.
Well,
but look at that. That's ExxonMobil. But let's take a look at the FAANG stocks now and see how they're doing, because here's the FAANG.
Facebook's the one I think that's been destroyed.
This is a group of the FAANG stock futures.
Netflix too.
But this is starting to suggest a bit of a recovery in here maybe. For the last 10 days.
Yeah. Well, look at the bounce we had here.
Right.
Why can't we have another bounce like that here?
Why not?
Why not? That's what you look to see. Like, this keeps dropping and you say,
yeah.
But then it breaks it. Yeah, no,
So let's see. Let's put our little arrow here for next week, because maybe we were right.
Little arrow.
Is that what we're going to get? Or are we going to get one of those drops? Anyways, so let's talk a bit about one of our guests here. And so Maxim Galash is the CEO of Coinchange. And Coinchange is a yield play on crypto.
Oh.
And how that works exactly, well, I'm going to let him tell you.
Is the stable coin get involved in this?
He's going to tell us.
Okay.
Joining us again is Maxim Galash. He's the CEO of Coinchange Financials Inc. at coinchange.io. Maxim, welcome back.
Thanks for having me.
Yeah, always a pleasure. Maxim, you seem like you're probably one of the best people in the world to talk to about all of the activity, we'll call it, in the crypto universe. And so the first question that comes to mind for me in all of this is, we saw what happened with Tether and Luna. We saw what happened with the Celsius exchange. And now we're hearing that Coinbase is having some trouble, and anybody who has deposits with Coinbase will be treated as an unsecured creditor, meaning they could lose everything. So my question for you is, to what extent do these risks impact Coinchange customers?
Yeah, thanks for high regard. Yeah, I don't think I'm the best person in the world, but we know something about the DeFi and the data on the DeFi, and it's showing itself pretty resilient compared to the centralized counterparties that you mentioned. So I don't think there's anything to worry about Coinbase. Right? So all that footnote print in the terms of service agreements, it's part of any standard package you'll find on multiple centralized exchanges. So I won't really be worried about that. But definitely the other aforementioned parties like Three Arrows, Celsius, Voyager, BlockFi, they're all fighting through the market right now, and we still will see how it all unwinds in the future. So Coinchange is a little different to compared to those counterparties. We don't really deal in centralized lending or replication world. That's the main reason behind the debacle, right? Sharp devalue of all the collateral and all the assets on the books of the counterparties, right? And the leverage in the system kind of self-cleaning itself right now, and there's a lot of margin calls and liquidation calls are now being made on each other. We don't really rely on centralized counterparties at all. The only centralized counterparty we have is you as a client. So we have a retail customers and corporate customers who are supply side, right? Pretty much transferring their assets into our platform. And we have a demand side for that liquidity is a DeFi protocols, decentralized protocols that has been pretty resilient in the last couple of weeks, right? Apart from the Terra debacle, that was a programmatic stablecoin. We're talking about the Uniswap, Aave, Compound, Curve, and the other transactional businesses, transactional applications on top of the blockchain, decentralized applications that are not influenced by a single party decision. So meaning that they function per a certain programmed behavior with the open rules that are highlighted and described to the full extent on the white paper. So they are not incentivized to take any action because of the market sentiment. As an example, with the centralized counterparties, they are taking decision personally as a human being, and they will be pursuing their own profit in the first place. So somebody is shorting the Bitcoin and trying to do everything possible to let the value go down, to push the value go down. Somebody is long on the Bitcoin and trying to do everything possible to let the market stay where it is, right? So in that, if you're on the wrong side of the trade, you're getting liquidated. So for sure, we're not in that business. So we are not lending assets. We're not repuffing assets. We're not taking any market positions and timing the market with our customers' assets. So it's a very different business, and I would say our customers are well protected and can find us to be a safe harbor because we never actually stopped the withdrawals, since all this debacle happened a month ago. And we did have some redemptions from the retail side. Obviously people are scared and they have no way to see through. But the corporates who understand our business and how we're different just open up their accounts.
There's been no change in the rate of interest, which is essentially at the base of your value proposition to your investors?
On the Ethereum side, if you look at the last 7 days, right, annualized return, we've been paying more than if you annualize it over last year. Okay, so because there's a lot of activity right now, transactional activity on the decentralized applications, right? Uniswap, PancakeSwap, Curve, Aave, a lot of transactions happening with the staked Ether, USDC, right, and USDT as well. So in terms of the stablecoin yield, yes, it substantially went down because liquidity has been drowned out, right? So DeFi liquidity is half, even less than half to what it was about 2 months ago. So obviously there is less liquidity, there is less activity, and there is less fees that are generated on those protocols, right, that we get a part of. So Ether is higher, stablecoins are lower, Bitcoin is trailing around 1% as it was always. So yes, we are affected, but it's at one degree we're affected in a good way, and the stablecoins are lower than they used to be.
In the context and all that, and understanding that a lot of our viewers will not have seen the previous interview, can you sort of give us an outline of Coinchange's business and value proposition for its clients and how it differs from all of those issues you just described?
Yeah, so Coinchange is a really simple value proposition. We do one thing and one thing only. We generate yield across the full DeFi ecosystem. Okay, and we do it on a risk managed basis, meaning that we don't allocate all liquidity into super risky pools with the super risky assets. And we don't allocate the full liquidity into very, very low risky pools with the very low risky assets. So we have a spread out allocation that's automatically managed to optimize the yield and ROI, right, based on the fees that are generated across those pools. It can be lending pools like Aave, it can be transactional trading pools like Uniswap, or it can be like serial pools like on Binance, so staking pools. Meaning staking, it's not a long-term staking, not a layer one staking. It's a protocol staking, and it's fully liquid staking. So not like Ether Lido staking that's has been a trauma for Celsius, right? So our business is allocating liquidity across multiple different pools, across the full DeFi ecosystem to generate yield on a risk-managed basis. Our customers don't see through to the assets. All they see is a very simple user interface that looks like your I don't know, a simple neobank, with a few accounts, with a 24/7 support, customer support available, with the ability to buy and sell major assets like Bitcoin, Ether, and 3 stablecoins, and ability to move those assets into the earn account to start earning daily compounded yield with no lockup. So there's no minimum required, right? So you can put $5, you can put $5 million. There is no tiers on your yield, so you earn the same return on $5 or $5 million, and there is no lockup. You can request your funds at any point of time, right? And the only thing is that there is a certain cutoff time during the day. If you do it before the cutoff, you get it the same day. You get it after cutoff, you get it the next day, similar to a bank. But it's a fully liquid, and all the assets are always under our control. We don't lend the assets to third parties. We don't trade on those assets. We don't repoffecate those assets. So we don't have a centralized component to our business. We have a centralized component as an application that takes in a customer and does the full KYC and a compliance, right? That does account management, wallet management, and reporting. But the yield itself, the IP and the core of the business, is a fully decentralized basis. So there's no centralized counterparty. It's only those protocols, those applications that are built on top of different blockchains that govern a certain transactional activity. Either trading, so swaps, either lending, either insurance, either staking. So, and our smart yield, call it that way, orchestrates our liquidity across all those to maximize the yield and minimize the risk.
What are the risks to your clients and to your business? What are if those risks that are part of the other part of the ecosystem are not within your sort of bailiwick of concern, where are the risks? What are the risks in your business?
So the main risks are a protocol level risks, right? So when you provide liquidity to a pool, you exposed to a cyber attack or a hack of that pool, of that protocol. So let's say if we hold our liquidity in Aave, one of the pools, lending pools in Aave, and Aave gets hacked, there's a high probability that our pool that we feed liquidity to is going to get affected, and the liquidity is going to be exposed and stolen. So that's an exposure. The other exposure is depegging of a stable coin. So let's say if USDT depegs from its par value, right, it's a depegging risk. So we're losing value because we are considering it to be one-to-one as a stable. So there's also a market risk, but asset risk, not market, but market asset risk. But this is on the client. So if you hold the Bitcoin with us and Bitcoin goes down, you definitely get less dollar value for that Bitcoin out of the system because Bitcoin went down. So it's an asset risk, but it's a client asset risk. So there's three risks: client asset risk, protocol security risk, and depegging of a stablecoin risk.
It seems like a great business, except for if those risks you outline crop up. So if the risks, one of those risks was to materialize, and let's say that one of your pools was hacked and the asset's stolen, how would that affect your client? Are they insured? Are you insured? Is there any sort of guarantee, warranty, or are they exposed as an unsecured creditor?
So yeah, for sure there is no insurance. First of all, DeFi is still a pretty nascent market, right? And there is no concept of insurance. There is Nexus Mutual and a few other protocols that try to mimic the real world insurance, but it's not like a life insurance. You die and your family gets funding. No. So it's like a probability of insurance, of a principal to be protected. That's DeFi insurance. And we looked into that. We don't have that. We don't really buy DeFi insurance. So are they protected in terms of the warranties or guarantees? No. There's no warranties or guarantees of the full safety of the principal. Okay? So what happens if one of the risks are getting materialized? Then it's up to the management to decide either every customer is going to get notification that portion of their allocation has been lost, or the business is going to recapitalize that from their own balance sheet. So, and pretty much rebalance the loss on the client side. So that happened before to Bitfinex. I think they did pretty much a haircut to all their customers and announced that. right? When they lost it in a hack.
Yeah.
Because that can happen to a centralized exchange as well.
Sure.
Right? Coinbase, Bitfinex, you name it, right? It can happen to anyone. It can happen to a decentralized protocol.
Right.
So.
Okay, so then
It's a discretionary decision by the management how to handle the situation, but there is no insurance and there is no guarantee.
Right.
But it's a very low probability, and even if it happens, there's a low allocation, right? That's associated with every protocol because they're very distributed. We have about 25 protocols today, and we don't hold more than like 5% in any protocol, no matter the risk profile.
So risk management through diversification.
Exactly.
Bitcoin, for example, has now lost 70% of its value from its all-time high. What if it was to lose another 70% from here? How would that affect your business? Obviously, there's going to be clients suffering a devaluation in their portfolio because the asset has gone down. But if the asset keeps going down, is there an existential risk for the viability of your business?
I mean, we are market neutral, right? So all the liquidity provisioning we do and across all the pools is market neutral. So there's no impermanent loss. There's no, but don't take any market positions, right? So it doesn't affect our business. It affects our business indirectly through the market sentiment, as it does right now. So right now, as I mentioned, retail customers are scared, right? So they don't want to really feel a difference between us and BlockFi, us and Celsius, right? And you name it, right? So they're thinking these guys are paying yield, they're all the same, no matter what the mechanics behind it is, right? No matter what the risk profile of that yield is, right? So they're pulling out the assets, right? So we do have redemptions right now happening from retail, and we honor everything. I mean, you can look at our website. I mean, there's no hold on withdrawals, right? But with corporate customers that don't understand the difference and understand that right now DeFi showed resilience in the last 3 weeks, in the last months, right? There is a high transactional volume with a lot of assets, and there is a higher APY that we can generate. So they do top up their accounts as well. So it's all about the sentiment. If the Bitcoin market tanks another 70%, there's going to be more liquidations, there's going to be more blood, there's going to be more loss of capital, not only in the book, but in reality, right? So, and it's not going to add any confidence to anybody, neither to our corporate customers, nor to the retail. So it's going to hurt the business indirectly, but it doesn't make us insolvent. We're not really dependent on the market direction.
Finally, what has changed in your business since our last interview back in February? Have you got more assets under management? Is there a bigger audience base? What all has improved?
Yeah, I mean, we're gradually improving right through different market cycles. And right now we have about 40,000 followers across all our social media. It's a strong community that we have. We have about close to $50 million of the assets on the platform, more or less. I don't remember when we spoke last, but trailing around the same number for the last couple of weeks. I mean, we had redemptions, but we have deposits. I would say that we also are taking a very interesting product to market. I mean, right now, as we talk, right, we have this one product that we take to market differently. So it's a daily compounded yield product, right, that we sell directly to retail customers that they come and join our platform directly. We have a business customers, so the corporate joins our platform. Right now, we also have yield as a service, we call it. So it's yield API. So if you run your own app, let's say a wallet app, and you want to offer yield to your customers, then you don't want to just build that business from scratch, especially in the DeFi ecosystem, because it took us 3 years to build ours. You come to us and you integrate our API, right? So your customers on your app can transfer their assets into the earn account and start earning daily compounded yield. It doesn't cost you anything, zero. All it costs you is your development time to integrate, and it does create you a new revenue stream because it's a revenue share business for us. It does create increased retention for your customers, so they stick around longer with your business. It does increase conversion, so your customers convert more into your app because you have that extra feature. So we are taking it to market next month. We'll already have a couple of integrations done with one neobank from New York and one exchange. And we're going to start marketing it on our site and selling directly to our corporate customers next month. So I think this is a killer feature. This is a big, interesting way to go to market with the same product that we've been paying yield for the last year for our retail customers.
Awesome, Maxim. Well, that's a great update. We're going to leave it there for now. We'll come back to you soon. Thanks for your time again, as usual. See you soon.
Appreciate it. Thanks for having me.
You bet. Bye for now.
I don't know much about this crypto thing, but it doesn't seem to do what it's supposed to do after the fact. Like the stable coin, some of the ones that went to zero were supposed to be somehow pegged.
Yeah, well, Terra was algorithmically pegged to the U.S. dollar.
Terrible.
Terra became tyrannical.
Tarantula.
It was
Holy
troubling.
Smoky.
Yeah, well, it went to zero.
Did you have a lot invested in that one?
No, nothing.
You missed that one.
I did.
How did you miss it?
I ducked. I was picking something up off the ground.
Usually you put money in everything, don't you?
No, I don't have much to put into anything anymore.
Maybe you should change your policy.
No, I've got all my money in pigs and sheep now.
Well, at least that's a growing population.
Oh, and cannabis. Did I tell you, I've got about 50 cannabis plants going.
Don't go over the limit.
No, I have a license to grow up to 96 outdoor, 232 indoor. I'm not even at half, I'm just at halfway my outdoor license. Yeah.
Well, that's interesting. I mean,
yeah.
So what are you thinking here? I mean, I think the new president of Colombia is saying that we like Bitcoin.
That's, how many pesos in a U.S. dollar?
I don't know.
10 to 1, I think, or is it 1,000 to 1? It's not like the yen. Anyways, I haven't been to Colombia in a while. But that makes so among the governments who are now leftists, only Argentina, Brazil.
Chile is...
No, Chile's got us hard left. They've elected a communist. But so of the larger economies, only Argentina and Brazil are now not communist left. You could argue that Argentina's left, but populist left, but actually so far left that it's right. Anyways, yes, South America, is it going down the tubes, or are they going to prove the world wrong?
Can we expect to see
when was the last time?
Moratorium on debt prepayment, for instance.
The giant FU to the rest of the world.
Left wing here.
Now, mind you, that's why the interest rate is so high, right? In Argentina, because it's like, if you get 3 interest payments at 50%, then haven't you got all of your money back?
Come on, what's the difference between,
if the coupon's 50% and you collect 3 payments, you're good.
Home free.
You're gonna stick it to us? No, I don't think so. Yeah, but when was the last time there was a continent that was uniformly communist in history? How about never? Never before has there been an entire continent aligned with the communist ideals and political thinking. So this could be an interesting experiment. Now, it's also terrifying for all of the companies who are in the extractive industries in these companies. We don't know any of them, do we?
Well,
but could you imagine if let's call it the socialist wave, was actually to gain momentum in South America, and the nationalization fervor that is a natural extension of socialist thinking were to sort of seize all that? That would have such an effect on the valuations of so many Canadian companies in the extractive industries.
The ones that are involved down there, or all of them?
Well, no, just primarily the ones down there. Yeah. They would be the spark that would have contagion into companies that had nothing to do with South America. Just because people would go, oh my God, mining's going into the shitter. I better sell.
Would you say, based on your experience, that mining guys like Canada, we're spoiled here, right? You got Quebec.
We live in a bubble.
You got BC in terms of mining.
BC is
What about
Quebec is
Mexico? Would you say Mexico is safer than Chile right now, or Peru?
Safer from the perspective of can you get the money out and return it to investors?
Look what happened to that company in Russia.
Kinross.
They basically said, we'll sell it to you for $640. No, you won't. You'll sell it to us for $340.
Yeah.
We just locked it in half.
But that teaches you a lesson, hopefully, that you think you can operate in difficult jurisdictions. Sure you can. But when you look at a country like Mexico, let's look at the companies who have mines in Mexico. Goldcorp. Who else has mines in Mexico? Lots of little companies. Let's look at their balance sheets. Are they extracting their gold from Mexico, and is it showing up on their balance sheet? Then yay! Then that's obviously a safe jurisdiction. Argentina was rated by the Fraser Institute as one of the safest jurisdictions in the world. Now, Argentina notably has not elected a communist government yet, but,
Well, as soon as they do, that's going to change.
What makes you think they're going to? They don't even have a communist candidate.
Here's what I think, okay? Here's what I think. You got, and I was lying there thinking,
when was this?
Powell. Last night.
Were you smoking weed?
Not right then, but maybe just before that.
Did you have one hand in your pocket? Don't tell me you were sleeping in the raw, so you didn't have any pockets.
Jesus, what are you talking about?
This isn't X-rated.
So here's what happens. They printed up all this money during COVID, and they doubled from 5 trillion to 10 trillion, whatever those stupid numbers are. So the rich got all really rich, and now the haves and the have-nots, the divide's never been greater, and I think the have-nots are just getting a little pissed off. And the left is winning now because the average guy sees that the left maybe can help them get some of that largesse that the right seem to have. There's this back and forth, and I think the left's. I think capitalism's in for a little. There's just too many billionaires, and it's just too few people that have all the freaking money.
There's no.
I'm starting to think I might become a leftist gorilla.
You're just a leftist gorilla.
Yeah.
Oh.
Yeah.
You're gonna start killing people?
No, kill them. I'll just steal their money.
Oh, okay. What if you have to kill them to get their money?
Pretty.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. We also have one of our sponsors, Shawn Khunkhun, is CEO of Dolly Varden Silver. My next guest is Shawn Khunkhun. He's the CEO of Dolly Varden Silver, trading on the TSX Venture under the symbol DV and in the United States under the symbol DOLLF. Shawn, welcome.
Thanks, James. So grateful to be on. Thank you.
It's our pleasure. Shawn, this story is the story that keeps on giving. I've followed it for on and off for years. And so tell me, what is the status of Dolly Varden now?
Dolly Varden is a historic mine. You go back to Herbert Hoover opening the mine at around 1920. This was the richest silver mine in the British Empire at the time. And then, the big production occurred in the 1950s, where for the whole decade, the mine produced, the Torbert mine that is, and it was, I think it was the third largest silver mine in the country at the time. And these properties have produced some exceptionally high grades. But really, that's when the story gets pretty quiet and remains quiet up until 2017. In 2017, a management team took over the company, and they started doing some aggressive drilling. And a new resource was put out in 2019. I took over the company, James, 2 years ago. So what I inherited was a little company that was a $20 million TSX company trading at 24 cents a share. Mm-hmm. And the vision that I've had was I wanted to use Dolly as a vehicle to build a top 10 silver equity. And, if you look back over those last 2 years, despite a lot of our peers either going sideways or even lower, we've appreciated in all the metrics. And it's all been on the basis of increasing the mineral inventory. And we've done that in two ways. We've done that through discovery, and we've done that through acquisition. So we've got a company today that is $150 million market cap. We've got 63 million ounces of silver in the ground and 1 million ounces of gold. And we've got about 25 million in the bank, and we've got 3 rigs that are looking to make new discoveries.
The stock has doubled practically since mid-May. So what is driving all the excitement currently? Is it the drilling that's going on?
What we've done is when markets went higher, for example, we had the silver price move up 50% in 6 weeks back in 2020. we opportunistically raised a lot of money. So when markets were good, we tapped the financing markets. And then when the market pulled back last year, we made an accretive acquisition. So I think we've demonstrated as a management team that, we will take what the market gives us. And I think there's a lot of excitement, particularly around this drill program, because by making the acquisition we've made, we've unified a mineral trend in a highly prospective area. And there's about a 5-kilometer stretch, James, that has not been explored. And I believe in this idea of periodicity. So we've got 4 deposits in the south, 3 in the north, and the chances of another deposit not being found in the middle, I think are slim. So I think the market is excited by our technical team's ability to grow the resource, and our management team's ability, whether it's in the boardroom or in the field, to grow this company.
Is your expectation to continue drilling and add to the resource that you have? Is your intention to partner with a major, or is it something else?
In this business, I always see them as hybrid opportunities, right? So, you have to be advancing on multiple parallels. So we spend a lot of time on the corporate development side looking for regional opportunities. We spend the most amount of our time on organic growth, so exploring our own properties. When you talk about strategic partnerships with larger entities, we've got a corporate shareholder in Hecla Mining. So Hecla is America's #1 pure silver producer, and they happen to be our 3rd largest shareholder, and they've happened to have funded about, I'd say, somewhere in the neighborhood of about 25% of all of our financings in the last 2 years. So they've been actively participating. I think in Q1 alone, they invested somewhere in the neighborhood of about $8 million into Dolly Varden, so a significant material amount of money. And actually, if you go back to the history, they actually, James, took a hostile run at the company. So there was a takeover attempt in Dolly Varden's history with Hecla. So it's an interesting relationship. We've got their VPX as a technical advisor, as part of something that we refer to as a technical committee that helps us. So we leverage their technical expertise, as well as we've been leveraging their financial help in advancing our projects and also consolidating the region.
I also noticed that Eric Sprott made an investment in the company back in May.
Yeah, Eric got behind me 2 years ago as a 19.9% shareholder. He loves the Golden Triangle. He loves silver, and he's been one of our biggest supporters. I would really say that without Hecla and without Eric, this company would not be where it is today.
Is 2022 going to be essentially the year of drilling and discovery for Dolly Varden in this unexplored 5 kilometers, or are you adding to the resource and all of the above?
We're in a market right now where companies that were trading at $750 million are trading at $100 million, right? So everything's on sale. So I think it's important for us to continue to look for opportunities beyond our borders. But the lowest hanging fruit here is organic growth. And we've got the team that can make discoveries. So our focus right now, we're razor focused on this 30,000 meter drill program. I've helped plan 99 drill holes. My geos will get a good chuckle out of me saying I help plan, but so 99 drill holes. The goal right now is the catalyst that we want to deliver to the market, shareholders and prospective investors, is drill results. There's no better way to add value to this company than increasing the mineral inventory through discovery. And we've got the targets, we've got the money, and we've got the team. And so I'm expecting it to be a very newsy period starting in August and right from August running right until February.
Shawn, it seems to me that we could be on the cusp of a serious resource market, particularly as it pertains to junior companies exploring for precious metals, given that as inflation and the Fed has driven interest rates higher in an effort to stem inflation, the expectation that crypto would form some kind of alternative asset to those negatives clearly didn't materialize. So is it safe to say that we're going to see more interest in precious metals as the illusion of an alternative asset class in crypto starts to become more the theme?
I've got a lot of confidence in precious metals, and particularly precious metals in Canada. We've got a 5,000-year history with precious metals, and we've got a couple 100-year history with this being a stable mining jurisdiction. So, I think for Dolly, what I love about the company is we've got 50% of our resources in silver. And I could spend the next hour or two talking to you about why I think that's rare, unique, and special in terms of try to find a silver mine. It's why we've had so many silver companies, yellow themselves out, right? And go after gold. And so I think the fact that we've got so much silver is critical. And I think silver has taught me by experience and also by studying history that as you move into a mature bull market for gold, silver outperforms. So we've got that torquey silver bite. But what really helps me sleep at night is 50% of our resource base is in gold. And so whether we get inflation, deflation, whether we roll into a recession, we have a period of stagflation, no growth, depression, gold is going to protect us on a relative basis. So listen, I'm a big believer of the metals. I have physical gold. I own gold and silver equities. And I just think with everything that's happening in the world, from debt levels to geopolitical to just, we are setting up for the greatest bull market. And we saw you look at 2010, that was the best market in the last 100 years for mine finance. And I think what we're setting up for something here is going to be better. So, I've got a lot of passion for this stuff, as you can hear. But, I just think that, look, the key is, and you look at what just happened in Colombia on Monday, where they're potentially putting a ban on open pit gold mining. This is why I'm in Canada. If you want silver, you've got to go to Chile, to Argentina, to Mexico, to Peru, and you look at what's happening in Peru, Chile, and now Colombia, and Argentina. Try to get money out of Argentina. So my point is, finding a silver mine is so rare. Finding a silver mine in a place that you can mine, and the government is not going to nationalize, prohibit, expropriate. It's even rarer.
Shawn, going back to the history of the Kitsault Valley and all of the mining that has happened there, apart from Dolly Varden's past production, there's a real history of production from that area, is there not?
It goes back 100 years, but let's talk about what's been going on in the last 5 years. So we've got two operating gold mines, copper gold and gold, and Newcrest, which is the world's third largest miner, has come up from Australia and spent $4 billion in the last couple of years on mergers and acquisitions in the neighborhood. And then outside of Newcrest, you have Newmont, which I would argue is the premium gold miner on the planet. They're in the region. On the copper side, you've got Teck. So the majors have come here and splashed $5 billion on M&A in the last 3 years. You've got two operating mines. You've got the BC government spending money on improving roads, bringing in clean hydroelectric power, increasing port facilities. So the infrastructure is tremendous. And then if you go back into history, what was one of the best mines of its era? The Premier mine. You look at SK Creek, I would argue it's the best gold mine on the planet. Not to mention it produced 200 million ounces of silver at an average grade of 2,200 grams per ton. So the area is littered with, and this is a fact, the richest 20 kilometers on our planet is the 20 kilometers around KSM Brucejack. On the planet, richest 20 kilometers of gold and silver mineralization in the world. And so we are set at Dolly Varden in the same rocks that host these big deposits, these big high-grade deposits. So we've got all that prospectivity, but we're underpinned by this 138 million ounce silver equivalent resource. So we've got a great underpinning, and we've got room to grow, and we're in tremendous area that's ripe for more discoveries.
The glaring question to me, and I'm sure on the minds of a lot of people, is at what point do you go into production?
For our investors, I want to try to drill out and identify as much silver as we can so that when we enter into a bull market, those ounces will be valued at 4 times what they're valued today. And the other fact here that I've witnessed, and this is one of the things I'm trying to capitalize on the business side, is the mid-tiers are not replenishing their ounces through exploration and development. So what I'm trying to really do here, James, is present a pipeline project for a larger company, and we're doing all the de-risking. So in addition to trying to grow resources, we are also doing baseline environmental work. We are doing this is a de-risking exercise. We're doing an infill program to take our inferred resources into the M&I category. I really want to serve this up on a silver platter, and hopefully for my shareholders, we sell the company at the most optimum time. And if we don't do that, at least we can ride the acquiring company into the bull market. We can upgrade our shares in Dolly for shares in XYZ and ride that company into the upcoming bull.
That's food for thought right there, Shawn. That's a great update. We're going to leave it there for now and come back to you in due course. I really appreciate your time today. Thanks for joining us, Shawn.
Thanks so much for having me.
There's a Dolly Varden chart, looking good, looking good. So it looks like big things could be happening. I like the idea. Reading between the lines, it sounds to me like he's planning to sell the company to Hecla Mining since they've bought so much of the company. Eric's brought in for quite a bit. So lots of potential buyers there. And adding ounces to inventory doesn't sound like a bad plan. Full disclosure, they are a sponsor of our show. And so everything we say about them should be considered in the context of advertising. Thank you. Okay. Great. There's our show for the week. We hope you enjoyed it, and we'd love to see you back sometime, hopefully next week.
And I want to point out, new electric cars now will pick you up with no drivers. And
wait, you have a story there.
San Francisco.
What happened?
You can pick up. You can order a car, pay online, and no driver will pick you up, just the car. The car picks you up.
No, anybody can do this now? So it's fully launched.
Well, they're doing it they're doing it based on, they don't want the whole thing to get jammed up, so they're doing it
selectively.
Yeah, but they're going for full launch.
If you're a journalist who's favorable towards driverless cars, you can get a ride.
Well, I'll tell you, and you know what? Women are already saying they feel safer at night with a driver.
I can wrap my head around that.
You know what?
Yeah, let's do it.
Changing world. I just want to say changing world.
Well, let's see how fast it changes. Join us next week to hear more.
More changes.
Ciao for now. Goodbye.